Midday in New York yesterday, President Trump posted that Iran had shot down a U.S. Army helicopter near the Strait of Hormuz. He said the United States must respond. The S&P 500 immediately dropped 2%. The Nasdaq fell over 3%. And here's the thing. That wasn't even the biggest story of the session. Let's run the numbers first. The S&P 500 closed down 0.26% at 7,386. The Nasdaq fell nearly 1%, finishing at 25,678. The Nasdaq 100, which tracks the biggest tech names, fell 1.12%. The Dow was the outlier. It managed to close up 0.17%, gaining 86 points to close at 50,872. The Russell 2000, which tracks smaller US companies, also eked out a small gain. But underneath those headline numbers, there was serious damage. The VIX, Wall Street's fear gauge, surged 8% intraday, hitting its highest level since the 7th of April. And those index closes don't tell the full story. At the intraday lows, the S&P was down 1.5%. The Nasdaq was down over 3%. We got a partial recovery into the close. But the damage is accumulating. Since the S&P 500 hit its all-time high on the 2nd of June, just 8 days ago, the index is down over 4%. The Nasdaq is down more than 6.5% in the same window. This is now the third consecutive session of pressure on semiconductors and AI-linked stocks. And it started last Thursday, when Broadcom reported earnings. Broadcom's guidance for AI chip revenue came in slightly below what analysts expected. In any normal environment, that would be a minor footnote. But after months of semiconductor stocks running 50, 60, 70% this year, slightly below expectations was enough to trigger a rethink. Friday was the first domino. The Nasdaq fell 4.2%, its worst single day since April 2025. Nvidia, Broadcom, and Micron led the selling. Monday offered a brief bounce. Micron recovered nearly 10%. It looked like the worst was over. Tuesday killed that hope. The Philadelphia Semiconductor Index, the benchmark for chipmaker stocks, fell as much as 8.6% intraday before recovering some ground. Nvidia, Broadcom, and Micron all dropped between 3.5 and 7%. Here's the question the market is wrestling with. Is this a healthy correction in stocks that went too far, too fast? Or is it the beginning of a real repricing of AI valuations? One factor making this more complicated is SpaceX. The Elon Musk space company is pricing its IPO on Thursday and debuting on Nasdaq on Friday under the ticker SPCX. It's targeting a valuation of $1.75 trillion, the largest IPO in history. Strategists are openly suggesting that investors are booking profits in chip stocks to free up cash for SpaceX. When you're talking about that much capital rotated, it shows up on the tail. Now, back to that helicopter. Iran shot down a US Army Apache that was patrolling the Strait of Hormuz. Both pilots were injured but survived. Trump posted about it, called it an attack, and said the United States must respond. That single post briefly wiped out Monday's entire recovery. But here's the whiplash. Within hours, Iran and Israel announced they had halted strikes on each other, following an appeal from Trump. Oil prices fell 3.5% on that news. Stocks partially recovered. So in the span of a few hours, we went from ceasefire hope to active escalation threat and back again. This is what makes the Iran situation so difficult to trade right now. There's no clarity on where this ends. Oil is still sitting near $91 a barrel on Brent, well above pre-conflict levels. That's feeding directly into US inflation. Which brings us to the third thing driving markets right now. Tonight in US time, which means Wednesday morning for us here in Australia, the May Consumer Price Index drops at 8:30 a.m. Eastern. The forecast is sobering. Headline CPI is expected to come in at 4.2% year-on-year. That would be 40 basis points higher than April's reading of 3.8%. Core CPI, which strips out food and energy, is expected at 2.9%. This matters enormously right now, because the Federal Reserve meets on the 16th and 17th of June, 1 week away. Last week's jobs report shocked the market with 172,000 payrolls added, against a consensus of 80,000. That strength killed rate cut expectations for this year. Now the market is actually pricing a rate hike before 2026 ends. A hot CPI print tonight would pour petrol on that thesis. The 10-year yield is already sitting above 4.5%. That level is acting as a ceiling on stock valuations. Here's what's important to understand about yesterday's session. Most of the market actually held up. Technology and energy were the only two sectors to finish in the red. 6 of 11 S&P sectors closed green. Financials, healthcare, industrials, consumer discretionary, utilities, materials, and consumer staples all managed gains. This is the rotation story. As investors pull money out of high valuation tech, it's flowing into the rest of the market. The Dow, which has lower tech exposure and more industrials and financials, gained on a day the Nasdaq fell 1%. But here's the catch for Australian investors. Our market has significant tech exposure in names like Wisetech and Xero. And our miners, BHP, Rio Tinto, Fortescue, are already feeling pressure from iron ore sitting at $101 per ton, down from a recent high of $105. Let's bring this home. The ASX is likely to open slightly lower this morning, call it 0.5% or so on the downside. The partial US recovery limits the damage, but the direction is clear. Watch ASX tech names in the first 30 minutes. Wisetech Global is the one I'm watching most closely. It's already pulled back from highs alongside the Nasdaq. If it gaps down more than 2% at the open, that's telling you the repricing has more room to run. The energy sector is complicated. Woodside and Santos will track oil, and oil is doing strange things right now, falling on ceasefire hopes, then spiking on Trump's helicopter post, then falling again. Expect volatility in those names today, but the underlying picture for oil exporters is still supported. For our miners, iron ore is the number to watch. It's sitting at $101 per ton. The round number of 100 is the psychological line in the sand. BHP, Rio Tinto, and Fortescue will be sensitive to any further move in iron or any shift in the China demand narrative. Gold is the bright spot, if you can call it that. Gold climbed above $4,300 an ounce after the Iran-Israel halt was announced. Northern Star, Evolution Mining, and Newcrest should see some support. On currency, the Australian dollar is under pressure from the strong US dollar. A lower AUD is generally good for our big exporters, miners and agriculture. It compresses the margins of importers and retailers. And all of this feeds into one macro question that hangs over everything. What does the US CPI print tonight mean for the Reserve Bank of Australia? The RBA is already on hold. If US inflation stays hot and the Fed signals a hike, Australian rates will stay elevated for longer. That's a headwind for property, for consumer names, and for anything rate sensitive on the ASX. 3 things I'm watching during today's ASX session. First, the open in Wisetech and Xero. These are the ASX's cleanest proxies for the US tech trade. How they open tells you how much of the Nasdaq sell-off has been absorbed. Second, iron ore futures. If the price breaks below $100 per ton during Asian trading today, BHP, Rio, and Fortescue could face a rough session regardless of what the rest of the market does. Third, oil. Brent crude is sitting at $91. After the ceasefire announcement, it fell hard, but Trump's comments put a floor under it. Any fresh escalation headline out of the Middle East could spike oil sharply intraday. Watch Woodside and Santos accordingly. And then tonight, after the ASX closes, US CPI at 8:30 Eastern. Whatever it says will set the tone for the rest of the week. If this breakdown saved you time this morning before the open, hit subscribe and tap the notification bell. We publish this every weekday before 10 a.m. so you never miss an open. Drop a comment below with what you're watching on the ASX today. I read every one. See you tomorrow.